Hello and welcome to the weekly outlook. Um, just having a quick look at what we've got going on the calendar next week, and we're starting with immediately at 1 a.m. on Monday morning. We've got manufacturing PMI and the Caixin manufacturing PMI from China, both expected to come in slightly weaker, still in contractionary territory below the 50 mark, and this will probably weigh on the likes of the Aussie dollar and the New Zealand dollar. So the Aussie dollar rejected that 7-1 area, which we expected to happen in our previous analysis last week, but it is just hanging around the 7082 price. So tomorrow morning we could wake up, we could see a bit of a gap in the market and a return to the downside if that data comes in much weaker than expected. So I think we can certainly expect to see this dip down back down to and retest certainly the 7,000 area, and may even try and retest back down to these lower boundaries of about 6.8 later on in the week. Okay, so we're looking at the downside on the Aussie straight off the bat on the Monday morning. Okay, so let's go through to a little bit later on the day. We've got manufacturing PMI in the UK. Now, we do need to see these manufacturing PMI figures start to improve. This is what's really been holding the pound back. But as you can see here at the moment, we've had this downward trend on the pound and a bit of a relief here, which has created this pattern of this falling, this rising wedge. So what we expect to see here is a breakout to the downside, which is just it happened on Friday afternoon, and it started to pull back. So I'll be looking to resell this. In fact, from the 142.80 area, that sort of price. I think we're going to see further downside in the pound next week and a retest of the 4,000 area. I'd certainly expect to see it break out from this triangle pattern here. Let's have a look at the sort of length we've got here. We've got about 268 pips from there. So this breakout here is the area. So we're looking at about 268 pips, which does take us down to just underneath that 4,000 area there. Okay, so that stands to reason that we would make that journey. Okay, so that's the pound on the Monday as well, and then leading through. Now we have got, interestingly, the cash rate and the RBA rate statement on Tuesday. Now this could throw a bit of a spanner in the works on the downside of the pound, depending on the rhetoric coming from the RBA. Just before we go into that, just quickly go through we've got the ISM manufacturing PMI on the US on Monday afternoon, and we've got ECB President Draghi speaks as well. Now President Draghi is due to testify about 2015 ECB annual report before the European Parliament in Strasbourg. So he's likely to talk about monetary policy, and that could well have an effect on the euro. Now, he was particularly dovish in the last meeting, saying that further tools will probably be implemented in March. Now, the market actually responded to strong data from the US last week, which was the various things coming out from the US, the advanced GDP. We had the employment cost index and the Chicago PMI, revised University of Michigan. All mixed data, but the euro started to back on its course to the downside last on Friday. So I would expect to see this downside continue, but we are getting stuck at this 108 level at the moment. We've got to see if that will break loose from there, and then continue on down to the 105. So ECB President Draghi speaking could be the catalyst for that. But again, we do need to see this breakout of these lower bounds here, so that we can open up the door to go down to these lower levels that we've been targeting, going all the way back to December 2016. So we will keep an eye on that. But we have got another sort of nice declining curve here with these slightly lower highs. to the upside. So it's looking good, but it is taking a long time at the moment. We are seeing that consolidation holding quite strong. So back to the Australian dollar, the RBA rate statement. Now, obviously, if they come out with hawkish comments, then we will probably see the Australian dollar rally. Certainly against some of the other currencies at the moment, such as the pound. This is in a bit of a downward spiral at the moment. The pound, Aussie dollar. I think we probably will see a bounce off the lower part of this channel, but as you can see at the moment, we've still got quite a way to go before we get to that lower bound of the channel, which is around about sort of 1.9 thereabouts. So we'll have to see what happens with that, but we'll possibly be looking to trade out of that RBA rate statement. If it is positive, then we could probably see a rebound in the Aussie dollar, US dollar as well. So, those initial sales on Monday, I'll be looking to lock those in by Wednesday to make sure that they're nice and tight for the RBA announcement. We've also got BOJ Governor Kuroda speaks. Now, their monetary policy caused the yen to sell off quite drastically, and the US dollar was the major beneficiary of that, with it rallying back up to the 150 area. However, I do think that we will see this sell off from there, from the here again. Kuroda, whether he comes across and tries to correct this, but they actually still want a weaker Japanese yen at the moment. But I think it probably can go down a lot further before they started to worry about it. So it's all going to depend a little bit on the US data and how that comes across as well. We've got on the ADP non-farm employment change, US dollar non-manufacturing index on Wednesday afternoon, and the crude inventories. Crude, obviously, there's a lot going on with crude at the moment. Big effect on the market due to the fact that we had hints that OPEC, some of the oil nations, starting to ask OPEC for cuts in production, which has started to cause a bit of a rally in the oil price, and obviously that's been helping commodity-linked currencies as well, such as the Canadian dollar, which, if we have a quick look at here, we can see has fallen quite drastically as well. So the US dollar CAD, I do expect this to recover. We were looking for it bouncing off the 4,000 level. It's tried a couple of times. It is back down there again at the moment. So we'll see what happens if it breaks through that 139.50. Then the downside is back intact, and I should think that will continue down to at least the 138 level. So we'll see how that sort of pans out next week. Again, oil inventories is going to be a big leader of that. Also, China data as well. Will also be a sort of a bit of a catalyst for any change in direction in the US dollar CAD. So good US dollar data will be important, but it is driven by oil at the moment, that currency pair. Okay, so moving through to Thursday, we've got the BOE inflation report, the MPC official bank rate votes. Now these are expected to remain the same at 108. And official bank rate votes. Now we have had not too bad a data coming out from the UK. We had a bit of an uptick in inflation. So if that comes through again, as been with a slight uptick or expectation of a slight uptick, then we could be on for a bit of a rally on the pound by Thursday. Now I would be looking at trading it against some of the weaker currencies at the moment, such as the New Zealand dollar. It's fairly weak against the New Zealand dollar at the moment. You can see here we've got this long-term weekly chart where we've got this engulfing candle here, and we've had this push down. So I'm still looking to go long on this against the New Zealand dollar, and looking to recover back up to 2.4. So we'll see how that pans out. Now Thursday could be the big catalyst for that. That could be where the big move comes from, and we finally get a break through the 225 area. So we'll see how that pans out by then. Excuse me. And then moving through to Friday, we've got the monetary policy statement on the Aussie again, so that will also be important to see if there's any forward guidance there on the Aussie dollar. But we've already got our early direction of the week there to the downside, and then obviously we'll wait to see what happens on Wednesday. Now on 1:30, we've obviously got the most important meeting of the month. We've got the average hourly earnings, the non-farm employment change, and we've got the employment rate. Now, this employment change is expected to drop to 192 on the US, which is quite a big drop. But we have had some quite big readings from the US of late. Average hourly earnings expected to move higher to 0.3%. So it's going to be a combination of data here that moves the market. If we get a slightly higher, better than expected reading, if we can remain above 200k, for instance, on the non-farm payroll, then I think we will see the US dollar strengthen. But certainly, if that happens and in line with a 0.3 average hourly earnings increase, then we're certainly going to see the US dollar rally. This slack in the labour market that the Fed want to see used up before they can move through to raising interest rates. Okay, so that's about it. There's quite a bit going on next week. It is quite busy. Things are obviously going to change as data comes out. So get yourselves into the live room to keep updated, and we'll take it from there. Cheers for now.